Hey guys, and welcome to the Working Money Channel. Stefan Hubert pointing this out. XRP shorts are up 80% today. I mean, there isn't that much to short left, is there? Oh boy, when will this BS end? And he's retweeting out Grin at SpankMaker1's tweet here. Seems like somebody already knows the outcome of tomorrow. And what he's insinuating is that these people are opening up XRP short positions, because what these investors are assuming is that the news coming out today is not going to be good for XRP, bringing the price down again. Don't know if that's what we are going to see, though. Right now, XRP is trading at 39 cents, about 0.391. And I've got it on the weekly here, but if I just throw it on the hourly, you guys can see after yesterday's mini pump to the upside where we saw XRP almost hit 41 cents, it is right back down. Just following what Bitcoin has been doing, trending in this channel, okay, and holding this continuous level of support at around $29,000-$30,000. So we did see this. So I have Bitcoin up here right now on the hourly, and we did see Bitcoin tumble down. And now just trying to hug that level here that I posted on the chart since yesterday. So this is where we're at in the crypto space here. Let me throw it on the daily to give you guys a better sense of what that trend is looking like. Nothing but boring sideways momentum here for Bitcoin. And when we think we have some positive momentum to the upside, it comes right back down and starts hugging that level again of support right down in here. So this is the level to break, obviously. To the downside, well, then we're super bearish. If we move to the upside, well, then we really need to get above 48,000. But this first level here, $40,000 would be the one to crack. So that's where we're at with regards to the market. I mean, there hasn't been anything terribly interesting with regards to the technical analysis over the last month or so. We haven't really seen any stark movements to the upside or the downside. We've gotten some news moving the markets here or there, but ultimately it's just a wait and see game. But it is June 7th, guys, and I'm recording this in the morning, so the Ripple SEC conference has not occurred yet. I'm going to see if I can call into that conference this afternoon. That'll be something to look out for. In the meantime, James Royal XRP bringing us this news with regards to Ripple's liquidity hub and Lunu. So Ripple and Lunu, they're now partnering to enable luxury retailers to accept cryptocurrency payments. And I remember talking about luxury payments a few weeks ago. Well, today, Ripple, the leader in enterprise blockchain and crypto solutions, has announced their partnership with Lunu to support the Berlin-based company's luxury retailers in accepting cryptocurrency as a form of payment in-store and online using Ripple's liquidity hubs. So in this case, they are using the liquidity hub specifically. Lunu enables high-end and luxury retailers in the UK and Europe to accept crypto payments in-store via Lunu's point-of-sale terminal and online widget. Lunu currently works with customers including Farfetch, Off-White, Browns, and Steven Stone. Liquidity Hub will enable Luna's customers to accelerate the acceptance of crypto payments by optimizing the exchange of crypto assets to fiat in one place at competitive prices. So the Liquidity Hub, this is a perfect solution for travelers who are high income earners, high net wealth individuals who are likely traveling abroad and might want to stop into a luxury based store and purchase something, but they don't want to convert their Great British pounds to euros or what have you. So the perfect solution, obviously, using Ripple's Liquidity Hub to make these payments, and they can do that, bam, in real time. And it's not just in fashion, guys. Down here, the director of product at Lunu is saying for luxury retailers, it is vital to stay on top of the latest trends. And when it comes to payments, the greatest innovation is coming from the evolving crypto scene. So even within the method in which they are paying for their trendy clothing or jewelry or whatever, they still want to be on top of the latest trend. Thanks to Lunu, these retailers get access to new, younger, more affluent audiences that are constantly growing in numbers. Our partnership with Ripple has the potential to greatly impact retailers, customer service offerings by expanding the variety of payment methods and by portraying retailer brands as more innovative and progressive. So that's interesting news there. Wanted to thank James Royal XRP for posting that. I also saw this, guys, from the Wrath of Kahneman, the English translation. So first of all, this is a Turkish document from Deloitte, and it is from this year, 2022. It's mentioning that Visa services such as B2B Connect and RippleNet are examples and can be given in this topic. If this is accurate, then they are touting Visa's use of Ripple as a service. So here's that portion of the document. It is in Turkish, so it is, I mean, unless you speak Turkish, I don't know what that means. The follow-up, though, and by the way, Wrath of Kahneman did get somebody to translate that. Visa and Ripple used as two separate examples, thanks to Cambo. Services like Visa, B2B Connect, and RippleNet can be seen as an example, and this is from a Turkish buddy of his who did translate that. So interesting to see that through Deloitte, we are seeing Visa services, B2B Connect, and RippleNet being used as examples in this workflow, in this payment flow. I know B2B Connect uses private blockchain, so we may be talking about the two as separate examples of solutions that use DLT for cross-border payments, but I'm not Turkish. Wrath of Kahneman down here just saying how Google Translate is not perfect. However, I think we get the gist of this article, the fact that Deloitte even mentioning RippleNet and Visa as two of their partners in Turkey specifically. Kind of interesting, so wanted to thank Wrath of Kahneman for pointing that out. And the first draft of the U.S. crypto bill was released. It was, I believe it was leaked because I thought it was supposed to be released today. Anyway, some people here in the crypto space giving their point of view on this. John Deaton just tweeting this out. Tweeting out Digital Perspectives tweet here. It is scary how clueless our political leaders are. So, you know, on the one hand, we have this crypto bill, and it is likely going to help clean up the crypto space in the US so that we can have some regulatory guidance. But, you know, on the other hand, we have Bitcoin maxis, alleged Bitcoin maximalists, drafting these bills. And so I did a video yesterday on that. I'll link that video up here in the top right-hand corner if you guys didn't catch that. And just to expand on this, we have more information, more details of what was in the bill, which I'm going to go over. First, though, Cynthia Loomis here talking about payments. And I mean, I get where John Deaton's going with this.
Pitfalls will be to overregulate and to not leave space for innovation. Caitlin Long mentioned the Lightning Network. Right now, you can use Bitcoin as a means of payment. But a year ago, before the Lightning Network was fully lit up, you couldn't. I mean, that's how fast this innovation is occurring. This young guy named Jack Mallers with Strike just executed a deal with Amazon, so you can put your credit card in a machine. As the payor, the payee, which is like Whole Foods, gets that money instantaneously because it's converted to Bitcoin. And if they want to convert it back to US dollar on the other end, they can. But the point is, the float is gone. They're getting it at lightning speed. And so the friction that Michael Saylor just explained is kind of gone from the banking system.
Sounds to me like she's talking about on-demand liquidity from Ripple that has been around for a while now and has been implemented in countries globally and is working at scale. But she's talking about the Lightning Network as this new innovative technology. And us in the XRP community, we're just kind of laughing at this statement. Why, Cynthia Loomis, are you ignoring the obvious? Well, we know about the SEC lawsuit, and I'm going to get into the bill in a second. I will link this clip in the description of the video because there's another clip here, courtesy of Digital Perspectives here, Brad Kimes on YouTube. And this is just taking a look at El Salvador's crypto experiment after making Bitcoin its national currency. They're still going through growing pains. I did watch through this clip, and it is interesting, but I didn't think that it pertained to this video specifically. Anyway, I will link it if you guys are interested. And to the point of transparency, before I get into the bill, Hinman has been very worried about us investors because Ripple is way too intransparent, or opaque, perhaps. They should have followed the example of Ethereum and Consensus. Stefan Hubert just pointing out this part of Bill Hinman's transcript. I think I expressed concerns about did investors have all the information that they should have about the prospects, and did they get that on a timely basis? I expressed the concern about the lack of transparency. So this bill is going to address a lot of these concerns. What are crypto assets? Are they commodities? Are they securities? Who's going to be in charge of regulating them? I gotta say thank you to Adam Cochran here for going over this in detail, and this is a 12-part tweet thread, which goes on a little longer. He basically highlights in this tweet thread all the points, and so I'm gonna go over them with you guys, and we're gonna talk a little bit about them. Wow, so first, read some good stuff that moves us forward, but a lot of rough stuff as well. But remember, guys, this is still a draft of the bill. This is not the full completed bill. Overall, this gives U.S. crypto clarity, but it will have a huge cost and growing pains. Here's what I noticed in the first read. So just some bullet points. It requires DAOs to be registered entities in the U.S. Don't count as disregarded entities. If not registered in the U.S. views it as personally taxable. Requires all exchanges and stablecoin providers to be registered entities as well, and unclear language for DeFi, for decentralized finance. He continues by saying, clears up, and these are just all bullet points, so I'm just going over them, clears up securities laws and puts a lot of assets as commodities under the CFTC, which we're going to get back to in a sec. If there is any debt, equity, profit, revenue, dividend of any variety, then it is now expressly not a digital asset commodity. New disclosure requirements would make anonymous run projects almost impossible to comply under the law. So there are not going to be any more anonymous projects. Anything that trades one digital asset meets the burden of being a digital asset exchange. Current language seems like it would include AMMs. He questions, exchange oversight is going through the roof. So that is the other thing. Exchanges are going to be heavily regulated, guys. And KYC is probably just the beginning. Huge increase in compliance costs. So fees would definitely go up. So if you are at an exchange right now that charges little to no fees, that's probably going to change, but likely better listing and no trading against their own users. So the wash trading likely will cease, which is a good thing for us. Bankruptcy definition changes are a win for users, making it clear assets. Actually, let me just go back. I was just thinking about this. Going back to this point here, if exchanges are going to see more compliance, then I think a lot of the exchanges are going to close. I think only the top exchanges are going to be the ones that stay, are going to be the ones that weather the storm. And then if you think about that, because the wash trading actually got me thinking about this, then if more people, if more traders are going to be conducting business through a smaller amount of exchanges, that is actually going to increase liquidity on these exchanges, and we will get a better spread on our crypto. So that's actually a good thing, I think. Okay, continuing down here, bankruptcy definition changes are a win for users, making it clear assets deposited would get returned to users and not liquidated. Fee offsetting rules means exchanges will have to pay government from fees, likely putting costs up. So again, this is all going to affect the end user, the retail investor. If costs go up, well, that costs are going to be passed down to you and I. Adam goes on to say, weird requirements of users basically having to agree to a TOS, based on source code version. I don't know what that is. Any update to source code requires a new agreement. Language isn't clear enough to rule out variables as it's based on changes that could impact economics as well. So that's not so great. Okay, so explains it there. Extends power to a lot of regulators to investigate and advise on additional regulations in new areas. So this is interesting. Means if this is passed, this wouldn't be the full scope until at least 90 plus days after the act. So it gives us a bit of a grace period. Gives depository institutions the right to issue stablecoins, which is good. So looking favorable to stablecoins, gives clear compliance requirements and penalties. They are all higher than I'd like, but at least it is clear and not rules via enforcement. So exactly the opposite of what the SEC is doing, where they are just kind of going in enforcing and, take no prisoner style. This is going to give clear rules, so there's not going to be any of this rule by enforcement nonsense. It would seek to unify some money transmission laws across states, which would help a lot in the United States. So sending money state to state would also, though, expand information sharing between agencies, both state and Fed, which sucks. And then he concludes, plenty of good in here to at least make clear crypto is allowed in the US. So at least that's a good start. But it aims to regulate it as strictly or even more strictly than banks and current financial service providers. So that's the bad news, guys. I think I definitely know the Wild West days are over, and they're actually looking to, at least according to Adam Cochran here, regulate cryptocurrencies even stricter than they had before with banks and current financial service providers. There's not a lot of room for DeFi and none of the anonymous / non-regulated DAOs. This looks like it's only a draft of the bill and may not be complete, final, or even real. I would say, though, that if this is the case, And if it is passed in its form, it's good long term for big entities, but super painful near terms for 99% of cryptocurrencies. So, to the point in my video yesterday, 99% of cryptocurrencies are going to fall to the wayside. We've been hearing Brad Garlinghouse say this for years now. And as you guys can see here, there are 19,762 cryptocurrencies currently. At least those are the ones that are even just listed there on CoinMarketCap. So 99% of those likely going to get abolished. And even Adam is saying that here. And then he goes on for a few more tweets. Since this is just the first form of the bill, this is when lobby groups will start to get involved and help try to shape it and iron out some of the clunky language that would be problematic. So all hope isn't lost. There is good intent here. He continues on by saying, that said, anything with dividends, etc., looks like it's really going to be hung out to dry here. Not a clear path to saving that if this bill went through. And then he talks, that he had some nuanced points about DAOs if you guys are interested. I will link this in the description if you guys are interested in reading it again and just going over some of those points. Some interesting points here, I gotta say. The thing I wanted to really focus on is up here. Clears up securities laws and puts a lot of assets as commodities under the CFTC, guys. So to that point, Ashley Prosper also bringing that up. XRP community, listen up. The Loomis Bill appears to defer regulation of digital assets, including stablecoins and ancillary assets, to the CFTC. So here it is in the bill, virtual currency and ancillary assets. You can see here an ancillary asset. The term ancillary asset means an intangible, fungible asset that is offered, sold, or otherwise provided to a person in connection with the purchase and sale of a security through an arrangement or scheme that constitute an investment contract, as that term is issued in section, and then it gives the section of the act. But then down here, an ancillary asset provided directly or indirectly by the issuer shall be presumed to be a commodity consistent with this section of the Act, Commodity Exchange Act, and not be a security under these sections here. So not be a security, which means that essentially it would not be under the jurisdiction of the SEC. At least that's how I read that. Fred Rispoli down here responding, I haven't gotten deep into this yet. It is not incredibly well written, and there is delegated SEC jurisdiction, although the CFTC facially appears to have most of the authority, which is a good thing. But even the definitions of digital assets and ancillary assets appear to include securities. So it's not entirely clear what they mean here, although it is looking like they do want to push jurisdiction towards the CFTC and not so much towards the SEC. And, even Adam Cochran mentioned that clears up securities laws and puts a lot of assets as commodities under the CFTC. So all this very, very interesting stuff. I wonder if they are trying to take power away from that governmental body, namely the SEC, that has been screwing this up thus far. Also, guys, think about this in the context of the Ripple SEC case and any other potential cases that the SEC has in court today. Is this going to affect those particular projects? Is it designed to help those particular projects get out of the SEC's clutches, I guess, or from underneath their thumbs, and to be able to thrive through innovative technology? Now, I know there has been some controversy here with these Bitcoin maximalists drafting this bill, and that, some say it's doom and gloom for 99% of the crypto space. But I don't know about that. I mean, I'm kind of on the fence still about that. When recording and researching yesterday's video, I did notice Caitlin Long was on that list, and we know Caitlin Long has a favorable relationship with Ripple and XRP. So I don't think it's entirely doom and gloom here. I think that, these guys really do just want to get, Bitcoin front and center. And I don't really think they're thinking about the XRP RippleNet integration in the United States per se. But I definitely don't think that they're trying to purposely thwart the Ripple project and the XRP cryptocurrency. Just to add the icing, guys, I just wanted to bring you this from Matthew Lany. This is a claim from the IMF, the International Monetary Fund. If the IMF claims network-based application service providers such as RippleNet are not subject to specific regulatory requirements and do not need a specific license, who is preventing innovation and low-cost payments? So this was from the IMF from back in August of 2020, the Financial Sector Assessment Program here. And take note of this. Also, network or network-based application service providers, and they even mention RippleNet here in this example, are not subject to specific regulatory requirements and do not need a specific license. So this is the IMF's stance on these types of providers. We already know about the clarity worldwide for RippleNet and how Ripple is thriving in all these other different countries except for the United States. I think it would be ridiculously comical if the US at this point in the game decided to continue to press down on Ripple and XRP. We know the lawsuit is happening. We're going to get that conference this afternoon, but I think the writing is on the wall, guys. I think we're in the home stretch and we're about to win it. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.